Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 13th of September. Hope you had a good week. It definitely was for the markets. Semiconductors up 10% this week, NASDAQ 6%. Just big moves across the board. So let's take a look at these stock markets and make some sense of it. I'm going to start with this chart that I've been posting on Twitter lately. And it's interesting that I've been talking about the 5-day moving average and how it's been my main guideline for the last 20 or so years. It wasn't until recently when I created this script for TradingView, which shows when we're above it is green, when we're kind of turning sideways it's yellow, and below a declining 5-day moving average is guilty till proven innocent. It seems as though people have just started to really understand this 5-day moving average concept because of the visuals here. On the upper left, this is the SPY. You can see we made our higher high above the flat to rising 5-day moving average right here at 549 basically. For the NASDAQ at 459 for the Qs. For the SMH, we had a little bit of indecision, then the buyers took control at 224 and change. And then the one that I have the biggest position in is the biotechs, which really took control. Buyers took control at $98.50. So those colors have somehow transformed the way people view these markets. It's the same way I've been viewing them for, like I said, for decades now. Let's take a look at the SPY. We're back above the 20 and the 50-day moving average. I expressed some concern earlier in this week because we were getting rid of this data, which if we stayed down in this area would mean the 50-day moving average would be declining. Instead, we're rocketing higher. We're only a half a percentage point away from all-time highs in the S&P 500. So we had that shakeout here, and from that failed breakdown came a fast move higher in the S&P 500. We'll probably want to put an anchor on this low because early next week, what we'll see happen is pullbacks down towards that level will become our level of interest to say, will the buyers be able to regain control in that area? And here's what I would be looking for in that regard. It's innocent until proven guilty because it's above the rising 5-day moving average. It's stretched, so maybe it breaks out and then starts to pull back in. And then if it were to pull back in, maybe it does something like this and catches a bid along the anchor from the beginning of this move. The 5-day moving average comes up to it. We could probably put an anchor off of this peak right here if this ends up being a peak, and that anchor would come down and look like this. This is thinking forward about what the market can potentially do. It's not a prediction, but it's thinking about, hey, well, now that the market got extended, if you're not involved in it, if you got that FOMO, don't buy up here. Wait for the next pullback. Don't buy the dip. Instead, wait for the strength after the dip, because that's the way that we make money and avoid all the losses and heartache of having your account get drained while the market drifts lower. There was no reason at all to be a buyer of the NASDAQ when it was below the declining 5-day moving average. You had all that. A lot of people, they buy in here, and then what do? They sell when they get back to break even instead of buying at the proper place and then taking profits along the way, raising your stop up underneath the most recent relevant higher low for your time frame. Would I buy here? No, but that doesn't mean there's not an opportunity if it does something like this, or maybe it continues up and then it pulls back. But the bottom line is they always pull back. They always give you another opportunity. And if it's the exception once in a while where it doesn't, so what? You miss a trade. The Russell 2000, I'm continuing to avoid this. You could look at it and say that maybe it's tightening up and creating lower highs and higher lows, but still, it's just a giant mess. I'm not even going to talk about it because it's just too treacherous, really, too volatile. Semiconductors are right up against their declining 20-day moving average. Just above that, they have the declining 50-day moving average. Here's the anchor from the peak. So we're just underneath that as well. We'll have to keep a close eye on the semiconductors next week, because if this general area does in fact turn into a place where supply is found and then it drifts lower, well, then obviously what we would want to see is a higher low. Perhaps it does that at the year-to-date anchor. Or if it fails, well, then that would give us more reason for the larger market overall. But when you look at the larger market overall, it doesn't seem likely that we're going to pull back. We always just have to have in the back of our mind what could possibly derail this bullishness. And it might be the semiconductors. There's no evidence of that. I'd love to see it fail in here, pull back, make a higher low, and then see a beautiful rally in towards the end of the year. The biotech stocks I mentioned over and over again, they are bullish here. This is where they got a little bit extended on this day. They pulled back perfectly to the 2-day volume weighted average price on, I think it was Wednesday. They got back above the daily VWAP. All concepts I talk about in the anchored volume weighted average maximum trading gains with anchored VWAP book that I wrote. I also go into detail about the 5-day moving average. I don't understand if you follow me, if you don't, haven't read that book, because it lays this all out and it just makes it so much easier to understand. What I was pointing out here is what people were previously calling a cup and handle. Now perhaps we have an ascending triangle. The more times resistance is tested, the more likely it is to fail to continue to resist, and therefore we are on the lookout for a possible breakout here that could sustain. I'm long in here a decent size for me. It's a good size position because I view this index as having the best upside potential from here in terms of a risk-reward standpoint. You do what's right for you. I'm positioned at what I think is the perfect place. I didn't buy the dip. I didn't buy when it was sideways. I bought strength after the dip. Don't buy the dip, buy strength after the dip. You might have heard me say that about 15 million times. Financial stocks still undergoing some profit taking. We last Friday, we noted that the pattern of higher highs and higher lows was broken. We had these lower highs and then a lower low right here. That was the time for swing traders to exit. It rallied up right to the declining 5-day moving average and got smushed. Now it's possibly going to settle down a little bit early next week and then continue back higher. The primary trend is higher. I'm not looking for a top in this, but always have your stop. And bonds, they continue to behave well. As I've been saying, they're just something that should be owned. I say that, but you should have some interest rate exposure. I own a few REITs that are behaving well, and Alpha Trend subscribers are aware of those and long some of them as well. Energy names, I still don't see any reason to be involved.